Hello, folks. Drew Rathgeber here with ProFuturesTrader.com. Just want to go over a market tidbit that I've been observing and watching, and that has to do with inflation and what happened in the 70s and 80s. You can see here, right here, we had a kind of a double top with the inflationary number had a dip and it went spiking right back up to 1980, and that's where gold peaked out back then. Now we've got kind of a similar situation kind of unfolding. We got the 6.3, 6.5% inflation back a few years ago. It's dipped to 2.9% right now. But what's interesting, the interesting part is the reason for those inflation pushes was in 1973, 1974 was the oil embargo. Inflation jumped to 8.7 to 12.3%. And then 1979 and 1980, it was the second oil shock where it went to 13.3% inflation. So my analysis or my narrative right now is if we continue, this war narrative, you're going to continue to see oil shocks in the system, and you'll get what's called cost push inflation, which in my opinion would be quite bullish for the precious metals community. Now, in saying that, considering the inflationary number is currently 2.9%, I'd say gold and silver are holding up quite well, generally speaking, compared to what it probably should be at a 2.9%. So if this inflation number takes off, and I'm seeing it in the airlines right now are really struggling, with the added costs, and like again I said, the cost push inflation. If that happens, you could really see the metals take back off again and see that inflationary number really tend to start to spike back up. So I'm watching this really closely. Now, if we go to more of a peaceful and the war ends, this narrative will not take place. However, if the war continues on and drags on, we could definitely see some cost push inflation and this inflation really tick back up. So that's just my market tidbit for today. Have a great day.